everyone. There's some green on your screen right now if you look behind Sonu and myself.
It's right here.
Yeah, we'll get into that in 1 second. It's been a little volatile, right? Stocks in a correction. So that's the big question, right? In a correction, should we panic? That's the question we're going to ask about. But first things first, Sonu. Obviously, St. Patrick's Day themed this week. I've got my hat on. And the hat doesn't fit, if you can tell. My head's a little too big. And I've got this little guy. I guess you put shots or something in there. I don't know what it is.
We'll just say it accentuates your face.
It does. It brings out my eyes or something. Where are you? Pretty cool. Where are you?
I'm in downtown Chicago, and Chicago has this great St. Patrick's Day celebration, which for you and I has become a bit of a tradition for us to do these videos in front of the lake. They turn the lake, not the lake, the river green. This is the Chicago River that you see. That is bright green. It's usually green anyway, but now it's like a bright St. Patrick's Day green. So that is how the city celebrates. And, you know, it's nice to be here. It is getting a little cold, I must say.
Okay. We'll try to get this done in a hurry then. We call this take 5 for a reason. We can start the clock here. We're going to go about 5 minutes. What is a correction, right? Stocks in a correction. I'll start high level, Sonu, then bring you in. We hit an all-time high on the S&P on February 19th. Everything was great. Everybody was happy. And then 16 trading days later, so about 3 weeks, the S&P 500 was more than 10% off those highs. Just high level, and so I'll bring you in. We didn't have a 10% correction last year. Since 1928, we've averaged 10% correction a year. Are we still optimistic? Yes. Is this uncomfortable? Yeah, parts of this is uncomfortable, but we're not shocked by the fact that we've had a 10% correction this early or so far this year. Maybe we're surprised how early it happened, but why did it happen? I mean, is it all about tariffs? Is there something else in there? Why did we just go down 10% in 16 trading days?
Look, by itself, like you said, I mean, volatility is the price we pay to invest in stocks. I mean, historically, stocks have gained much more than cash and even much more than bonds, right? But there's no free lunch. And what do you pay for? You pay for with, experiencing volatility, right? It's not easy to sit through stocks when things are as volatile as they've been. But this volatility that we've seen is, I hate to minimize it and sound glib, but it's sort of run of the mill. I mean, 10%. I mean, every year goes through at least 10% correction. We haven't had one since October of 2023. We were kind of due for one, right? And now, obviously, there's uncertainty relative to tariffs. But I think, yes, there's a tariff noise out there. But I think partly, when we came into January, investors are very optimistic about U.S. economic growth.
Everything.
We just had
optimistic.
Yeah, exactly. Everything was up, right? And we just had 2 years of 3% annualized real GDP growth, and they thought that would continue well into the future. You and I weren't, I don't want to say we were pessimistic. I'd like to think we were a little more realistic. And I think the markets come down and realize, oh, wait, we are not going to get 3% growth anymore. It's going to be more in the realm of maybe 2%. Maybe with the tariff uncertainty, could it be maybe 1.5% to 2%, right? So I think it's a re-rating of growth expectations that's created this volatile period in markets. But again, at the end of the day, this is not a surprise.
Well, no, it's not. I looked at there's 22 years where the stock market gained at least 20% for the full year. So these are like the best years, right? These are like the strongest years. Sonu, the average worst day is 3.5%. A 3.5% one-day drop. There was a day in 1997 when the stock market fell 6% and still gained 30%. A day in 98 dropped 5%, still gained 25%. We just had a 2.7% drop last week. Last, I guess, would have been technically time people listen to this 2 Mondays ago. Worst day of the year, right? But then we followed up with some of the best days of the year. So that's some important concepts. Now, one more thing. This correction, 10%, all-time high to down 10%, happened in 3 weeks. I took a look at previous times. There's not that many. Only like 6 other times where we did something that quickly. Here's what you need to know, everyone. 3 months later, 6 months later, S&P 500, so stock market up every single time with really, really solid returns. So that's a small sample size. I get it, but it may be somewhat comforting that these violent, scary pullbacks, kind of like we saw August of last year. We didn't go down 10% last year. Remember the yen carry trade unwind? Hopefully you all forgot exactly what I'm talking about. But it was pretty scary last August. That was a real scary period.
I forgot about that.
Bounced back. Yeah, you remember. We didn't sleep much those couple days. It was a little frightening. So anyway, some context there. How are we doing time-wise? So we've got about a minute. We want to keep this 5 minutes like we said. We got a minute to go.
That's all my hands will last for.
What's that?
That's all my hands will last for in terms
Yeah,
of
there you
holding
go.
up
One
the
more
phone.
minute, 60 seconds.
Yes. No, look, like I said, this is not surprising. And, you never want to miss, let's say, the best days in the market. The thing
Yeah.
is, the best days in the market follow the worst days in the market. So be careful of panicking and selling,
Hmm.
because you may sell and find yourself, oh, suddenly the market's rallied 1 or 2 or 3 or 4 or 5% even,
Yeah.
right? And that's the risk over here with locking in losses. And at the end of the day, when do corrections turn into bear markets? Bear markets being like, let's say,
Hmm.
20% or even a
Hmm.
sustained 20-30% pullback for the S&P 500 usually tends to be, at least based on history, during recessions. We
Yep.
don't see a recession right now, and I think that's that's all I have to, that's what I fall back on when thinking about what's happening in markets right now.
Well, don't say fall back, because if you fall back, you're in that
Oh
green
yeah,
water.
I'm in the
You're
river, and I'm
really
all green.
you thought
Yes.
you were cold. Now you're really cold. So we'll leave on this. Hopefully, this is a good discussion. Things are scary. Most years have scary headlines. Most years have peak down days. Most years have a 10% correction. Last year, 2024, up like 24-25% on the stock market. If you miss the best 10 days because you sold in early August or you sold in the springtime when we had the big dips and you got worried, you missed out on the best 10 days. Your return, Sonu, is like 4% on the year. The year before,
Mhm.
gained like 23-24% again. You're right about 3.5-4% again. So, there's a lot going on, a lot of uncertainty out there. But the reality is, we think the economy is still growing. We still think we're going to avoid a recession. Volatility is the price we pay to invest. And we're still pretty optimistic that we're going to get through all of this. With all of that, everybody, I'm going to take this hat off and everything, and Sonu's going to go get warm. Sonu from live on location in Chicago, latest Carson's Take 5, where we're talking about corrections. We'll see everybody next time. Take care. Thank you.